So investors are awaiting the Federal Reserve's rate decision later this afternoon as the central bank contends with the latest CPI report, which shows headline inflation continuing to ease. Joining us now is Waddell and Associates and CEO and Chief Investment Strategist David Waddell. Thank you for joining me this morning. So I want to first get your takeaway here. Obviously, you have a data-dependent Fed, this CPI print showing that continuing softening in inflation here. What's your take on how investors should be viewing this?
Well, not only is it softening, Rachelle, but it's also falling like a rock. I mean, consider the fact that 2 months ago we were at 5, now we're at 4, next month we'll be at 3. We got that PPI number this morning that was decidedly negative and has been for 4 or 5 months in a row. So inflation's fallen 5% off of the peak, and it's fallen from 6 just in February. So inflation's falling like a rock. There's no way that the Fed, if they're data dependent, can deny that. So that absolutely cements the pause. And as you said, 5% of people out there think they're going to hike. I don't know what those 5% of people are looking at, because if they're data dependent, the data says you got to stop here. And maybe what we hear today, I kind of doubt it. It'll be a hawkish pause, if you will, but it's less higher for longer and maybe here for longer. So you talked a little bit about the dot plot. Maybe we see them signal one more rate increase just to keep everybody honest. But this rate hike campaign is over, and that's a good thing for investors. I'm not sure it ignites a rally from here, but it certainly validates the rally that we've had.
Now, we had a visual just up there a second ago talking about the 3 recessions: economic, markets, and earnings. So walk us through, first of all, we'll start with markets, where we are in that process and what the playbook is for investors.
So that recession is over. Congratulations, we had it last year. So when the Fed took the podium last year and made recession a policy, the marketplace looked at that and said, okay, what do we do? And so they went back to recessions from the past. Take the last 12, and the S&P 500 came down 24% at the median over the last 12. So they just discounted the market 25% into October, which was consistent with a recession. So we didn't have one, but psychologically we did, economically, I mean. So the market recessed into last October, and then it dusted off the playbook and said, what happens when recessions end? Well, markets tend to go up, 25% over the next 12 months. And lo and behold, at this point, we're not in October yet. Market crashed sideways from here. We're up 25%. So the market recession has happened. The earnings recession that people have been calling for on the median over those same recessions in the economy that I referred to, you might see a 13% drawdown in earnings. That hasn't occurred. We are down 6% from the top. We'll see what happens this quarter. Last quarter may have been the low. This quarter may have been the low. So we're in the middle of the earnings recession, but it's about half of what the analyst community was calling for. And then in terms of an economic recession, have we had one? Have we not had one? Remember, the first 2 quarters of 2022 were negative. So technically in the books, that's a recession, but we didn't count it as such because consumers were strong. Now we look forward, and consensus is that the economy will contract less than 1%, maybe third quarter, fourth quarter, first quarter. Who cares? It doesn't matter. Basically, the economy has been bumping along at a 1% real GDP growth rate for the last 6 quarters. And so as long as it doesn't mortally wound earnings, we're fine. And companies have navigated through this slow growth period extremely well, done a lot of restructuring, et cetera. So I think the market recession has happened. I think the earnings recession is happening, and it's not nearly as negative as people thought it was going to be. And I think the economic recession has yet to happen, but if it does, it's a non-event. Go back and look at 1990.
And so then for people who have been sort of worrying about the recession then, but when you look at the labor market, when you look at the strength of the consumer then, what do you think is going to be the next catalyst that investors should be focused on when they have sort of different indicators telling them different things about a recession?
Well, so I gave a speech in Boston, I think last week at an institutional investor conference, and there are 100 people managing a whole lot of money in the room. And I said, how many of you all think this market's going to be higher 3 months from now? One hand went up. That's a whole lot of people that are offsides in a market that's now up 15% on the year. And so you've got a huge amount. In fact, there's 8 trillion and change in money market funds globally. So you get a lot of people that are out of position, which sparks this FOMO rally. And remember, at the end of May, we had AI hype going for us. We had earnings sentiment negative. We had economic sentiment negative. Now it's June, 2 weeks later, and we've got AI hype going for us. Now we've got earnings estimates rising, and we've got economic estimates rising. At the margin, it looks like the Fed is done. So if you're sitting on a whole bunch of cash waiting for the retest of the October 2022 lows, and you're thinking that ain't going to happen, you've got to get involved. And then the question is, where do you get involved? Okay, I don't want to buy the FOMO AI stocks, and so I'll go buy the rest of the market, which is decidedly cheap. And that's why breadth is improving. So this is a pretty healthy setup as we go forward. And if earnings do end up rolling in as I expect they will, there's a lot of earnings power in this market going forward. So those sitting in cash at some point are just going to have to capitulate and buy.
All right, time to get off the sidelines. A big thank you to Waddell & Associates CEO and Chief Investment Strategist David Waddell. Thank you for chatting with me this morning.